all the research is in, and the number one question asked of loan officers in the year 2024, what's going on with these rates? As a realtor, you probably hear the same thing phrased, how's the market? What's going on in the market, right? We hear that all day. That's the main question that we answer, that we are challenged with, to try to tell people, what do we think's going to happen here? You know, what are rates going to do? What's home appreciation going to do? What are sales prices doing? What do we say? You know, we're only as smart as the data that we ingest and remember, and we're able to regurgitate, right? Or give our opinion, or watch the market stats ourselves and be our own analyst, right? So I found a pretty cool mortgage rate prediction table that was put out, and I put all this information together. I found Fannie Mae, Freddie Mac, Redfin, Goldman, Mortgage Bankers Association, National Association of Realtors, and Zillow, the past 6 years, what their prediction for the annual rate would be, and then what it actually wound up being after that year was over. Now, 4 out of 6 of these years, Redfin was the closest to what the actual rate wound up being. So if we take Redfin's track record and look towards the future and say, what do they think the 2025 interest rate is going to be average over the whole year, they see that coming in at 6.45%. So for argument's sake, we'll call that 6.5. All these other analysts on here from all these companies, they're all close. They're all within a half a point. So it's not swinging wildly. So we can have a fair amount of confidence that we're going to see rates in the mid sixes for the foreseeable future through the end of 2025. Do we see them falling after that? I don't know. These guys don't know either. Nobody really knows that for sure. We remember what it took to drive rates into the 2s and 3s, and that was a global pandemic, right? That was a huge upset in the global and national economy, and that's how mortgage rates reacted. So I've always told people, going back many years before COVID, that if rates are too low in the mortgage market, that means there's some other negative economic force that's impacting that and creating those low rates. So while it's good for us in the mortgage and real estate world, homeowners and things like that, it's probably not good for the rest of our economy and our 401ks and our investments and everything else out there. So something to think about. This is on the site. You can take a look at it. I'm putting pictures up in the video. This is something you can share with your clients, and it's something that's relevant to today's conversation. So when you get that question, you can be confident that we're going to be somewhere in the 6.5 range. Today, a third of the way into February, we're pushing about 7%, give or take, high 6s, low 7s, conventional, clean credit, clean files. It's kind of what we're looking at. A little bit cheaper on FHA, VA. As always, government's going to be a little bit cheaper than conventional, but that's about where we are today. So if you need anything, if you want to chat, give me a call, 813-606-4255, swifthomemortgage.com. We're here to help. Hope you're doing well. I'll talk to you soon. Bye.